Morning, it's Harvey Jackson. Just going to get through some of the major news items here today. I'll be traveling down in Souris later today. So, by the way, we'll just get through some of this. So, U.S. acreage planting stocks report is going to come out. And what everybody's paying attention to is acreage. Stocks will get paid attention to on ending stocks. But next week, we'll actually have a quarterly stocks report as well come out. But what's probably where everybody's going to pay attention to is how many acres of corn. I'm going to say if it gets over 95 million, it's probably going to have a pretty drastic push down. Now, what is the market actually trading? Is it trading somewhere close to 95 million already? Maybe it won't react, but I would say if it's greater than that, it's probably going to have there's some issue. The other one I want to maybe pay attention to is just what are the spring wheats and wheat's going to kind of come out there as well. Yeah, so that's the major news that's coming out today. And then April 2nd is the reciprocal tariffs, and this is just a bit of a listing of the reciprocal tariffs that are already on. So you can see, and this was put together by Reuters, just collected information from World Trade Organization. But U.S. has some tariffs on, and what this is simple tariff is just the tariffs that they do have on. They have 3.3 of tariffs on. Now weighted with all their trade is only 2.2. Mexico has, if you just looked at all the tariffs, their average tariff is 6.8, and weighted with all their exports is only 3.9. The same thing with Canada. The one that I would say we need to pay attention to is India, and they were in the news last week doing some egg reciprocal tariffs and reducing their tariffs on some of the U.S. egg products. But yeah, it's just interesting when you see what the actual tariffs are. So in the futures focus report that Cal put out, the COPA numbers are out, and you can see that there's 7,562,000 canola crushed to date. And then when you look at that number and you add it to current customs data, it's not leaving a whole lot of room for the last 4 months of this crop year for exports and crush. But yeah, so maybe that's why the market is reacting. But when you look at the CFTC data, you can see that there's been some shifting. Taking positions off ahead of these reports is a normal and well-known occurrence of doing so. Managed money is taking off these positions. You see the exact positions here. Canola is at negative 600 or 68,000 contracts. The major one is just how they've changed positions on corn from being long to at 219 down to 74,000 contracts. And soybeans is probably not a big change. Soy meal, not a big change, but interestingly, you see soy oil going that direction. And yet, since the report comes out, because this is basically Tuesday to Tuesday, released on Friday, soybean oil has actually rallied since last Tuesday. So I would expect next week's numbers, we'll see this one go up for sure. And probably reducing of the canola position as well. So Mitch Miller put out this article just taking a deeper dive on the soybean oil and its value. He stated there that he's going to put out a report, but look at this. So far, this crop year, this is the soybean oil exports to date from the U.S. Just massive compared to the last couple of years, but that's when there's a strong mandate to use the oil for renewable diesel. But they've already exported that kind of production. And then if you look at the nearby soybean oil futures minus soybean palm oil futures in U.S. dollars, we're starting to get closer to parity here now. But it had a pretty big discount of soybean oil to palm oil, in lower than $200 per metric ton. I don't know how this is actually going to play out, but this is Trump's words, and again he gets in front of the microphone probably multiple times a day, so see if he can contradict himself here. But the article itself, and I didn't put a whole lot of writing on here, but it's just that tariffs on Russian oil if Moscow blocks the Ukraine deal for the ceasefire. Now he's talking about putting tariffs on anybody that's buying oil from Russia that currently trade with the U.S. as well. Interesting. So this article, and just I always talk about weird stuff, but cocoa and fake chocolate is actually starting to come into the market. There's actually they're trying to manufacture cocoa or chocolate-like stuff in in the lab. And so there's a couple startups there, but just substituting it with palm oil, and that kind of makes sense with the price of palm oil. It could stay up there as long as these chocolatiers are buying it because they have the resources and margin. Canola trading basically unchanged. Rapeseed is down on the front month and flat on the new crop. Soybean oil is slightly down. Palm oil is up. Crude oil is up a little bit as well. Soybeans are up 4.5 cents, and wheats are just kind of both sides of up and down, but more down than anything. And the Canadian dollar is down, and corn is flat. So here's the canola. If we put on those positions at the 580, we're making some profits on that on the May contract or the July contract. Uh, there's a fair bit of upside that's happened already. Doesn't mean that you don't get back in to take some more. Same thing with the new crop. It's pretty good recovery, but at the same time, you still have to close that gap. European rapeseed closed the gap a long time ago at red day today, and that's resulting in 193 differential from European rapeseed to Canadian. There's quite a few more boats showing up in Thunder Bay. You can see there, and there's more boats that have been and leaving, so they're loading at a pretty good pace here. And those don't show up on on the numbers until they get transloaded. It's like a shuttle train. It's not inspected until it gets into or considered export until it gets through, let's say, Searle or Baie-Comeau, where they get loaded, unloaded, and loaded again on the bigger ships. Palm oil looks like it almost gapped higher here, but we're back at the highs that we made back there, but yet to get to those highs that we made in the fall. Well, just kind of pausing here, but if those Trump tariffs, if he's actually going to follow through on his threat with Russia, that would make the crude oil. Soybeans, it's had its 3 days of breaking through and continuing. Need to get above some of these moving averages and some of these other minor resistance areas as well before you can say that you're really bullish. Soybean meal, a little bit green there too. Canadian dollar, uh, basically just inside this range. Wheat has not had good days. Went up and down, and now we're retesting lows on every one of the three classes here. So if we looked at July contract or the more continuous contract, we still haven't made a lower low from the fall, but we're not making we do not have a good trend here, and we're probably still in a downward trend here longer term as well. I can show that some other day there as well. Here's your fall retested lows made. Now we're on third time. Hard red winter, same kind of scenario. But when we look at the fall, it's still above, but it's retesting the lows that were just made back in February. Chicago wheat, this one is just making new lower lows and continue to do so. Milling wheat looks like a bit of recovery off its low that it's made, but needs some support there. Corn is the one that it's probably got the major focus on today's USDA.